regulation is useful. What regulation should tackle is not necessarily trying to solve for all the KYC and AML issue that exist, because technology is moving very fast here. And I don't think regulation will be able to address the pace of development from the technology and write all the rules associated to that. So I think for me, it's more a set of guidelines that they should put in place and ask operators to meet those guidelines. And for the one that you don't, then they get blacklisted by the regulator and potentially sanctioned.
Olivier Dang, Head of Ventures at Laser Digital and Chief Operating Officer at KAIO, a platform building institutional-grade on-chain investment products that bridge traditional finance and DeFi through tokenization and composable infrastructure. What has been one of the toughest challenges you face as a TradFi banker, then moving to sort of right at the forefront of digital assets with Laser Digital?
The pace. Crypto moves so fast. Crypto native organization, they reach fundamental decision in hours. And that's fascinating to me. And having to adjust to that pace has been very much a wake-up call, where it doesn't mean you take shortcuts, but it means you need to zoom in as quickly as possible to the core issue and then make decisions with sometimes limited information.
Olivier, welcome to Alpha and Hash.
Very good to be here. How are you, Sri?
Very well, thank you. Great to be talking to you. Today, we've of course, had a chat earlier, but great to have you on Alpha and Hash today. And you're wearing two hats since the last time I met you, I guess. So, do you want to talk about those two hats? One from Laser Digital and the other as a CEO at a DeFi protocol.
Yeah, absolutely, Sri. So, I've been in traditional finance for almost a decade with Nomura, and about 3 years ago at Nomura, we convinced the board to set up Laser Digital, a fully owned subsidiary that will operate in the digital asset space. And at Laser Digital, we've been active now for almost 3 years across trading, asset management, and the venture vertical. And I'm in charge of a venture. I've done about 25 investments. And one of the thematic that really resonates with us is tokenization, real world asset tokenization. But for almost a year, we're scanning the market and couldn't find anything really that would excite us. So instead of stay on the sideline, we thought, let's roll up our sleeves and let's move into a builder mode. So with our friends at Breven Award, we decided to incubate KAIO. And KAIO is, and I'm sure we'll talk a lot about this, but it's an institutional grade tokenization platform. And we built KAIO over the last 2 years into a pretty solid kind of product with a very solid commercial traction. And now as we are scaling up and ramping up, I wanted to get more involved. And so I'm seconded also to KAIO as the COO. It's great, having this hat as a VC allowed me to meet so many entrepreneurs, understand what's working, what's not working, and allowing me to use some of that knowledge and make my own mistake at KAIO. I'm sure I'll make many, but it's a very strong team. We're super excited with what we're building, and the outreach with investor and exchange and the community has been amazing.
All right, amazing. I've sort of known Nomura for a long time. So in both my last two lives, actually. So this is my third life as a founder of Arna Protocol. I used to do M&A much earlier in my first life in London, and work closely on one of the transactions with the Nomura team back then. We didn't quite close it, but that's how I kind of got to know several people in the Nomura iBanking side. And then I sort of, when I moved back to India, I found my first startup, Milk Mantra, which is a consumer food tech company. And subsequently, during as we were planning the exit, Nomura was the iBanker as well for a part of the time. We didn't end up doing the transaction back then, but have had that. And I find it fascinating for a large Japanese bank, very conservative, and to not only step forward into the world of digital assets, have a separate arm, Laser Digital, which I was sort of wonderfully surprised to come by. And not only that, but Laser Digital then goes and incubates its own venture with KAIO, where you kind of stepped in as well. So what's happening? What's the sort of broader vision at Nomura on digital assets? Or is this like something that is happening completely separately? They've kind of seeded, funded it, and left it to you guys, or is it kind of strongly integrated?
A bit of both. I think there is definitely a very strong vision at the top of Nomura around the importance of digital asset. Actually, if you take a step back, Japan was one of the first jurisdictions where digital assets were ramping up. I mean, we all remember Mt. Gox and all of those things. So, the Japanese leadership is very much aware of the impact that blockchain will have on its kind of businesses. But it's hard to build inside a regulated global financial institution. It's very hard. You have colleagues in compliance, risk, you have, your run the bank IT budget that is, a massive part of a focus, and just in general, managing your reputation. So they understood when we were explaining to them that the best way to build in that space a technology platform and a set of processes, institutional grade processes, was to do it a bit outside of the core business. And because most of the laser digital management has been at Nomura for many years, there was a lot of institutional connectivity, trust, and they decided to back us. It's credit to them. They leave us with a large degree of autonomy. So we are able to operate as with any almost other crypto native out there. We are on the laser digital side trading almost 100 different token pairs. We've built extremely innovative funds such as a laser digital market neutral carry fund that extract yield from staking and then hedge your position with perps. And we're not just traders, we're not just investors. We always consider ourselves as also builders. We're active in, therefore, on the venture side into incubating a number of projects. KAIO on the RWA space is not the first one. We incubated Komainu, custody platform that is now fully independent. We incubated a company called Clear Token that is actively building a central clearinghouse for digital assets. And KAIO is the third one. But all of the incubation projects we have are following the same thematic, which is preparing for a full on-chain world where all of the traditional securities that are currently trading on paper or maybe Web2 kind of system will move into a 24/7 blockchain-enabled kind of technology. And Nomura is fully backing, laser digital, not just with obviously capital, but also regulatory advice and support around distribution. And of course, we also have our own expertise that we've developed, hiring a lot of people from the crypto native, and that's where we are. I think one of the leading institutional grade kind of crypto player out there. And that's what we want to do then on the tokenization side with KAIO and build one of the leading tokenization platform that will bridge the two worlds, the TradFi world and the crypto world.
Right. No, fantastic. It's not very often that I have someone on the Alpha Nash podcast who's also building on-chain asset management like I am at Arna, and it's a very new thing when you look at full stack on-chain asset management. In crypto, in DeFi, all these primitives exist. There's lending, staking, multiple, but it's very fragmented. All the primitives that exist. It's about creating an asset management layer, and that's how, if you look at TradFi assets, for example, they've gone through the same curve, and structured products is what provides much more risk managed, wider adoption of underlying assets. So can you break down for the audience what exactly is on-chain asset management?
Yeah, I think it's a bit of a catch-all phrase. The way I define it is bridging two worlds. I think you can do tokenization of low quality assets And we all saw that back in 2018, 2019, where many people were focusing on tokenizing whiskey and art and so on. There is no scale in this. It's great use cases, and the guys who tokenize, Pablo Picasso kind of painting, fantastic. They were moving the needle and starting to put this on the map. But clearly, people maybe more on the institutional side felt that this was not yet ready for enabling the kind of full scale tokenization. So when we're looking at the space, we always felt there is first we need to fix the supply. Let's focus on an asset class that has high quality product that can be tokenized at scale. And even better if they have a pain point that blockchain can solve. And so quickly we zoomed in onto alternative funds. Because when you think of it, it's a massive asset class, hedge fund, private equity, private credit. But it's very hard to access still for retail. And, unless you have, a relationship manager at a private bank, unlikely you'll be able to enter into the Brevan macro fund or the Hamilton Lane credit fund. So there is a real pain point for adoption there that I think tokenization can solve. Unlike maybe when we're looking at the beginning, should we focus on bond tokenization or equity tokenization? Those are a bit more accessible. There is value in tokenizing them. I'm not saying otherwise, but they're a bit more accessible for you and I. So we focused on an asset class that had real pain points, but that also had supply at scale from high credible institution. And so alternative asset was initial focus for KAIO. But then we felt, okay, great, you do let's call it the primary side, you tokenize. And then what? you maybe have a bit more efficiency, you've enabled a bit more kind of accessibility. But there's so many other things you can do once you are on chain, from, maybe the more extreme aspect of it, of putting some of those token into a automated money market pool and get some yield on the back of it, or just very simply trading it, having a bit of liquidity on the back of it. And so we felt let's solve also for the second and third leg of it, which is enabling composability for those assets in a way that will allow them to participate into the DeFi ecosystem. And that's what I call on-chain asset management today. Of course, there's many variations of that, and you can think about on-chain vault and all of those things. But here, for KAIO, at least that's the beginning. We bring high grade, high quality institutional products that are extremely hard to access today. And we put that on chain and distribute that in a way that would over time and still, very quickly will enable composability. And that's what I call on-chain asset management. You may have a different definition, other people may have a different definition, but that's today working. We have 200 million of TVL on the platform. There is a strong institutional demand. We even have to reject issuer and try to filter to make sure that we work with the ones that have really real use cases behind them. We want to, you and I, we've been in this industry too long. We know there's a lot of PR and people just wanting to do a nice press release and saying they've tokenized something. And then, not really wanting to go through a full transformation that is required by this technology. So we're really trying to work with people who get it, who understand it, and then that allows us to build this kind of a program of tokenization of various kind of funds.
Right. Okay. No, I think you're absolutely right. I mean, there are various forms of on-chain asset management, and it will take some time for probably all of them to come together as well. Like you guys are tokenizing off-chain high quality TradFi assets and bringing them on-chain. And at the same time, there is what we're doing at Arna is creating tokenized structured products for underlying native digital assets, which the analogy is very simple. Just like in TradFi, we needed structured products to have access to equities, for example, or other asset classes as well in more structured, simplified form. That's exactly what we need also from on-chain asset management for native digital assets as well. So the two types, I think, but ultimately on-chain asset management is a huge area which will evolve. So I think just from the context for everyone to kind of get a sense of where on-chain asset management is. And also one of the stats is quite staggering. In TradFi, 36% of all assets are managed assets, basically structured products from ETFs,
Mhm.
indexes, to more sophisticated products like illiquid hedge funds, private equity, and all of that stuff. So if you take the entire spectrum, in native digital assets is just 3-4%, and yeah, and that too, all of it is most of it today is in centralized structures. So native DeFi asset management itself is a new evolving space, and both these spectrums, as we kind of just touched upon, would be huge. Any thoughts on that?
Yeah, look, I think the as you said, there is different variation of on-chain asset management. The same way there are different TradFi asset manager with various specialization, and it makes sense for different players to focus on their own respective areas of strengths. I think the beauty of that is then we're going to enable that composability
Yeah.
on various kind of DeFi protocol that would allow those products to interact together in a much more seamless way. Because today, if you are invested in a hedge fund via your private bank, the most you can do is probably get a margin loan from your private banker at a very high LTV, and that's the only way then you can re-participate a bit into the TradFi ecosystem. In crypto, it's much easier. Your tokens representing your credit fund or your hedge fund can be immediately used into a DeFi protocol, permission or permissionless over time once you get comfortable with KYC. So yeah, what you're building is extremely valuable, I think, around structured product, and there's definitely a gap there. And what we're building is starting from our own position of strengths around solid relationship with TradFi issuer, and we bring that confidence to them. If you are Nomura, if you are Hamilton Lane, if you are BlackRock, you want to work with people who share some of your DNA, around compliance and reputation and risk management, and some of the more kind of degen protocol out there around tokenization may take maybe a slightly more loose approach when it comes to some of those topics. We're not that. We have our reputation here. That is the most important, and given who is backing us and our partners on that joint venture, first and foremost is how to do this in a way that will make global financial institution comfortable.
Right. Okay. Now, you touched upon a very important point around composability. Can you share how the RWA structured products which you got at KAIO, are they currently composable as well? For example, can I, as a holder of a particular vault token, be able to collateralize that on any lending platform, take a USDC loan against that, and be able to use it for doing some kind of a leverage loop strategy?
So that's the end state. We have all of the technology in place to do that. Now we're going a bit more through the kind of legal assessment. But yeah, ultimately, your tokens representing your kind of various funds will be available on, for example, Aave Horizon, and you'll be able to get some margin loan on the back of this, and then get some stablecoin extracted out. As you can imagine, KYC is something we are closely working on, and over time, I'm sure we will have the ability to use those tokens on permissionless pool. But right now, there's still a bit of gating that we need to put in place. But longer term, we envision also an approach where we will almost create an index of all the funds that we have on our platform. And you'll be able to decide your own weight for the index. I want 10% in the credit fund, 50% in the money market fund, and the balance maybe a bit more aggressive crypto yield fund that we have there. And you build that index, and that is wrapped into almost a token that will be made available to retail users, and freely tradable, freely accessible onto the new. It's only at the mint and at the burn that you need to be KYC, but otherwise it will be exchangeable and tradable freely by kind of retail users. So that's the target for us. We want to get very, very quickly. It's always been our vision. It's like make those products accessible. And when you think of it today, getting yield in crypto, either you get crypto yield and sometimes, you take, I think, smart contract risk for which the yield doesn't really compensate you enough for that. Or you have, money market funds, and it's hard to get anything in between. What we are going to build with this index kind of a retail offering, we're going to call it cash, is going to be really a product that makes the crypto yield through some of the laser digital crypto funds, and then the real world yield, such as the one from Hamilton Lane private credit fund. So you have diversified yield, accessible on chain through a token that you could freely trade and exchange or get a loan against it. And that is really going to democratize the access to some of those funds. But our distribution strategy is also going to be, and is already targeting qualified investors who can register directly on the KAIO platform. They have to KYC, but then they get access to those funds. And we are now talking to a number of large exchange around the VIP program and make some of those very attractive on-chain funds available to some of their kind of main users.
Okay, all right. No, I'm so excited to hear somebody sort of reflect the same ideas that we're building sort of on the native digital assets, native digital tokens as structured products. Index is exactly one of those. We're launching an index on an on-chain index on Arbitrum very soon, exactly. And I find, composability just opens up so many dimensions for creating structured products, which just make access to digital assets much more simplified and risk managed. And the space is also evolving. Recently, we saw one of the questions I want to ask you, given the specific tokenization of RWAs that you're doing. This issue around CoinGecko, for example, with if I forget the name of the other protocol, RWA protocol, and their TVL not being reflective of or being much more inflated rather of the actual RWA assets which are off chain. So how are you dealing with that to ensure TVL integrity for RWAs?
Yeah, I think we need to work closely with some of the kind of tracking platform from DeFi Llama to RWA XYZ, making sure that they track accurately and we report accurately based on how they design their own kind of APIs. But it is important, you're right. I think we want to, that's one of the main benefits of doing this on chain is you provide that transparency and that auditability to users. So no, absolutely. The way it's reported right now for us is a single line. We haven't broken it down by the underlying funds that we have tokenized on the platform. We're working on that and it will be made accessible relatively quickly. But you're right. I think what end users, investors expect and the issuers is like this 24/7 accessibility to a set of data that tracks not just the AUM, but over TVL, but also potentially the yield and the net inflows and outflows. And all of this, I think, is going to be made available. I haven't followed directly the CoinGecko issue you've mentioned, but yeah, I'm not surprised. But you remember there was also so much debate, 2 years ago around proof of reserve from,
Yes.
the stablecoin and so on, and they solved it, and so it's still some of a pain point of a new industry. And I'm sure some people may inflate, some people may underreport.
Yeah.
The role of those platforms is going to be key. The role of potentially on-chain auditors is going to be key. And I mean, we're replicating and improving the financial industry that had, 2 centuries to get there into the space of 2 decades. So we'll get there. There's going to be a few pain point to solve as we go through. But yeah, I'm sharing your views that it is very important to have this kind of a transparency and auditability that gives you confidence that the funds are what they claim they are. Yeah.
Right. Yeah. No, absolutely. And let's talk a little bit about the sort of tech stack of KAIO. So you're built on Polygon CDK. So can you talk about that? What was the decision framework over there? Why didn't you, for example, directly build on an existing chain?
No, actually, we build on Ethereum, and then we provide gateway that we use to bridge into other chain.
Okay.
And we want to make this accessible to as many chain as possible. Now we have integration of our gateways done with Solana, Arbitrum, Sui, Aptos. I think Tone is the next one we're planning, and maybe forgetting on Hedara we announced recently. So, but it's through gateways that we do that, and we have a relatively streamlined way now to integrate new chain through those gateways. Yeah.
Okay, all right. So currently, are all the structured products sort of multi-chain? So essentially anybody could deploy stables into the vaults from across chains, or you need to bridge them on to Ethereum to access them, or on Polygon, for example.
Yeah, we haven't enabled, end to end. It's not all product accessible to all chain. It's a bit based on demand, and in certain case, we're working closely with various foundation who are looking for seeding some TVL on a specific fund. Then we open that gateway for that fund specifically for them. So it's not a complete, all to all that we have put in place today, and it will, as you know, you're a builder, you need to prioritize a bit where you feel, the go-to market has to be in line a bit with your product roadmap and your constraints on the engineering side as well. So that's where we are today. It's like we can enable relatively easily any of our fund on any of the chain we support through the gateways, but we haven't opened that completely to make this seamless.
Okay, all right. So one of the things, Olivier, is like we have this sort of real permissionless, decentralized, boundaryless vision for finance, but obviously there are reg boundaries around various things. Even if you put assets on chain, even if accessibility is fixed, even if costs are significantly lowered, liquidity is significantly enhanced, but still there is a reg framework which kind of prevents the full potential to be reached. And there are sort of obviously right and wrong reasons, or arguments on both sides. How do you think, sort of, especially with Mika, how do you think RWA structured products that you have currently, do you have a vision for them to be seamlessly be available across multiple geographies, markets, and what's currently the regulatory framework? What's your overall macro view on some of the key reg challenges that need to be sorted before that vision is achieved?
Right. This is a big topic. First, to your point, you and I have been in TradFi. Regulation is useful. You cannot operate in a world where there's absolutely no regulation, because then it's hard to build the trust. So I think some degree of regulation is important. Obviously, when it goes into the extreme, like what was it called, Operation Debanking in the US, at some point you can start to question, the politically enabled kind of a regulation and the rationale for that. But some form of regulation is useful. I think what regulation should tackle is not necessarily, trying to solve for all the KYC and AML issue that exist, because technology is moving very fast here, and I don't think regulation will be able to address, the pace of development from the technology and write all the rules associated to that. So I think for me, it's more a set of guidelines that they should put in place and ask operators to meet those guidelines. And for the one that you don't, then they get blacklisted by the regulator and potentially sanctioned. But I think what Mika and Europe, they started maybe with first mover advantage, and then I think they lost a bit their focus compared to where the US and how quickly the US has moved. And I think what really works in the US right now, and although it still is a mixed match of various regulatory agencies, there is definitely political will to improve that. And what I think they are doing that makes a lot of sense to me is focusing on bringing fiat currency on chain. With the Genius Act, the Stablecoin Act, you're going to have a lot of digital dollar made available. And once you're on chain, where do you think those digital dollar will go? Some of them will go into, some of the top kind of crypto coins, but they are going to look for yield. They are going to look for high quality asset, but they're not going to go back to the analog world and, go to the, off-ramp cycle to invest into a hedge fund or credit fund. They want to stay on chain. And here is where we come in with high quality, we and the industry come in with high quality products that are made available on chain. Could be pure kind of crypto product, or it could be traditional products that are being tokenized, or it could be even some of the alternatives such as what we're talking about initially, the art and the forest and so on. But for me, that's what each jurisdiction should try to solve is fix the pain point on the supply side, make your fiat currency available on chain. And the US has taken the lead for that. Obviously, 95, 98% of the stablecoin are US dollar denominated. But if you look at M2, the US dollar doesn't represent that. Obviously, it's representing what, 40, 50%. But you're going to see, and I think the regulatory agency in Europe, in Japan, in various jurisdictions should focus on this, which is make it simple for either banks or private operators to provide your local fiat currency on chain in a regulated way. And then you're going to then see the emergence of that industry of structured product, tokenized product, and so on. If they try to solve, which we are doing in many cases right now, first we want to make sure that everybody is KYC'd, everybody is authorized, and so on. The industry won't develop. No, to solve for, completely, permissionless world with anybody trading anything, I don't think regulators want that. Personally, I'm not sure I want that. I don't want necessarily some of the funds that we have tokenized to be made accessible without any form of checks to sanction entity. But then there are ways to do that. For example, on the laser digital side, we're active in DeFi. We're working with companies that are allowing us to do a constant check of the DeFi pool.
Yeah.
And as soon as the pool has reached a certain threshold of questionable, blacklisted kind of wallet active, then you get out of the pool. You can even simulate your transaction with extremely low latency before you execute it. And that allows you to decide if you want to go and do the trade or not. So technology is solving also for some of those pain points, is getting there. But for me, regulation has to start with fixing the main pain point, which is how you make sure you can get people on chain with their local fiat currency. And then we'll see the emergence of our tokenized product that we're working on and so on. And, US is there. Japan has made a lot of positive moves towards enabling yen stablecoin. Euro has a framework, but I think there's still many constraints with their stablecoin framework. Honestly, I'm not sure where the UK is at right now nowadays. It's not clear to me. But yeah, if you are solving those three big jurisdictions of yen, euro, and obviously dollar to be made available on chain, I'm sure pretty much everybody else will follow suit.
Yes, and then there's also the China has been talking about the CBDC, and so has India. So once those two large markets come online with stables, those CBDCs are not the best structures, but at least it gets everybody on chain in some sense.
Yeah, I'm just to mention on that. I am not a big fan of CBDCs, and I've lived many years in Hong Kong, and Hong Kong and China, they have all of the technology infrastructure to easily create a RMB stablecoin. Hong Kong, is working on a Hong Kong dollar stablecoin framework. Do you really need to have, the central bank involved in creating the CBDC? I'm not sure, unless it serves other motives. And then here, it's not for me to comment, but I think private operators are probably a better place to bring regulated private operators like banks and so on, a better place to bring some of those kind of local fiat currency on chain as opposed to have a central bank involved. I don't know how the design is done in India, but certainly I think, I would question CBDC benefit if your goal is to bring your local currency on chain.
Yeah, absolutely. On the same side, I think the only advantage or real use case for a CBDC to bring in efficiency is into government spending, where to bring transparency for end use. For example, government spend billions of dollars, and we know that it's a very leaky bucket.
Yeah.
So If governments fix that through CBDCs, then that's great. But for all other use cases, the CBDC is definitely not the best structure. Yeah, definitely, I'm with you on that very much. Do you think, let's look at it in two ways. So do you think DeFi and stablecoins regulation is something which will be more global? Let's tackle DeFi first. They're getting some regulatory framework which is specifically applicable to one jurisdiction really doesn't make sense for a technology like DeFi and the structured products on-chain protocols with composability. When you put all of that together, the architecture of this new financial system really has no boundaries. So what's your view since we're talking about regulation? Is there a likelihood of sort of more global DeFi regulation coming up in the next couple of years? Are you especially you guys?
Zero chance. Believe me, I think even in TradFi, you started to see, a divergence of a regulatory regime when it comes to, Basel III application and so on. And this is in a world that regulators have been involved for, decades. Can you imagine, even at a local level, trying to agree on a regulatory framework for DeFi and then coordinating that at a global level? I think is going to be close to impossible. I may be wrong, but I think, for the next decade, I don't think we'll see, kind of a global alignment across the main regulators when it comes to DeFi. Now, maybe stablecoin, and there's going to be maybe a bit more alignment through at least some of the supranational, like the Bank of International Settlement, fixing, a certain level of capital ratio onto various players if they hold, crypto on their balance sheet and so on. But I think a lot of it will be through, I suspect, the courts and fancying various kind of lawsuit, and then that's how in each country the regulatory landscape will play out. But I think the US will set the tone. Realistically, we've seen US outside of crypto for many years under the previous administration. And last couple of months, we've seen, liquidity and innovation and a lot of the crypto activity moving back into the US. I think they will set the tone, given the scale of their market and some of the, pace of innovation that is happening there. And then various other jurisdictions, we're operating, for a couple of years with a regulatory arbitrage. I think we'll find themselves maybe having to adjust to that new world and mimicking a bit more what's happening into the US. Europe may play its part here as well, but like I say, I think right now the MiCA framework needs to probably evolve a bit to enable a bit more the digital euro coming online.
Okay, yeah. So with such a slim chance of a more coordinated DeFi guidelines, if not a regulatory framework coming out. Now, if you go into stables and what's happening with the Genius Act, and almost it's not no longer a covert sort of objective. It's very obvious the US is almost weaponizing stables for dollarizing the world. Okay, so how are you sort of how's the European Union going to sort of with the Euro stable coin? Is that something which is sort of one of the factors in terms of how stablecoin adoption regulation for non-USD stables will evolve fast? We saw recently, even in England, in the UK, that they've set a limit for how much individuals can own in stables, something like that, right? So, and probably it's also a reaction to all 95% plus being USD backed stable. So what's the thinking around that, and how as growing asset management platform, how are you thinking about navigating that part of the landscape?
I have no strong views there in that our products right now are available in, primarily we denominate them in US dollar, although, and that's how the issuers that we're working with as in terms of reference currency. there are many other asset managers that have products available with euro denominated, yen denominated. For us, the technology is extremely flexible. It makes no difference what your underlying fiat reference currency is. I think we'll see, a Bitcoin ETF approved in Japan in the coming, maybe this year, definitely early next year. That will open the gate, I think, to the Bank of Japan and the Japanese FSA outlining or strengthening their stablecoin regulation. They have made a lot of positive move there. So I think Japan will get there. And there's a lot of innovation in Japan that tends to be mostly centered in Japan. I think they struggle sometimes to expand it outside of Japan due to various kind of cultural and issues. But I think Japan will be the next market that will really boom in terms of both, the penetration of yen stablecoin as well as the emergence of a global player. Us, Ledger Digital, we are very well positioned to participate in this, given our parent Nomura. And the Middle East is, it's the place to be right now. In terms of innovation, out of Dubai, out of Abu Dhabi, there's a lot of innovation happening there. Actually, KAIO is headquartered in Abu Dhabi, although the staff is fully remote. But there is a very strong regulatory framework that exists out of VARA and ADGM to enable some of those financial innovation. And there are large backers with a lot of deep pockets who are willing also to put their money where their mouth is and backing some of those projects. So, I don't think I'm fully answering your question in that I really don't know what will happen to the euro stable, to the yen stable. I feel for us, we are ready to support any of that. I just hope that, the reg will evolve in Europe. I'm French. I hope the reg will evolve in Europe to support a strong, vibrant local ecosystem. That would be nice to see.
What's your view on the markets? You're currently managing, I mean, that's not the right terminology for a non-chain asset management platform, but you've got a TVL of 200 million already, almost 100% RWAs. But you mentioned one of those structured products which is generating yield on underlying crypto assets. Is that all through CXs, or is it composable with integrated with multiple protocols, and is it DeFi yield?
A bit of mix. So KAIO doesn't manage it. We use Ledger Digital as the investment manager for running this product. And they extract yield through a combination of either centralized earn program or DeFi yield, and they go where the strongest source of yield is existing. So they have a lot of flexibility there. They focus on the high quality tokens that pays most of the yield, and for making sure also that there is a liquid pair market to enable a hedge of the underlying. So it's both SEX yield and DEX yield, DeFi yield that they're looking for. But that's an important point. I just want to KAIO, we're not a regulated investment manager. We work with regulated investment manager that have their own product. We are tokenizing their product. We work with Ledger Digital on this fund. We could work with any other kind of crypto asset manager who's looking to provide a tokenized version of their funds.
Right.
And you say, why if you're already in crypto, tokenize my fund? But there is benefit just on chain accessibility. Somebody's unstable, wants to stay on chain to put money there. One other fund we're looking to tokenize, it's a Bitcoin yield fund. And that's very attractive to, for example, family offices who have a lot of Bitcoin. They don't want to leave that standing on a cold wallet. So they would want to work with a tokenization platform that allows them to access a regulated fund that provide Bitcoin yield, but still staying on chain. So that's what we're doing. In that case, we also work with Ledger Digital, who is launching that Bitcoin yield fund. But again, we could work with anybody. And, on the TradFi, like I say, it's BlackRock, it's Hamilton Lane, it's Brevan Award, and we are doing a few more as we speak. So, yeah.
We've got a few hours to go before the Fed announcement on rates. What's your take? And what do you think is going to happen to the markets? Are they priced in? I mean, it's surprising the last few days if you look at where the markets have been. What's happening? What's your overall market view for this week?
I don't know. I think they probably have to cut a bit. Is it 25? Is it 50? I don't really know. I haven't followed too much the news. I think the job market has been a bit softer, maybe than people were anticipating. So it may force a cut. But I think inflation remains sticky. But again, I'm not a macro guy. I don't necessarily have a strong view. Um, you bring this into what does it mean for crypto? Well,
Hmm.
obviously, risk on, then crypto assets tend to benefit. Um, Inflation or cheap money, then people are, thinking about the hedge. And right now it's gold and Bitcoin, I feel still, very much are the asset class. But then with the tokenization kind of momentum, increasingly, I think Ethereum is also finding its spot there. I know we call it the digital oil or whatever, but it's really seen today as one of the main protocol that banks or that large financial institution or corporate can use given its track record, its longevity. But many others are, finding their footing. And then the intersection of those two industries through the digital asset treasury company is a fascinating trend for me. Like uh, Michael Saylor started it, and now we have seen what probably 20, 30, 40 of those kind of Me Too have gone to market, including in Japan with MetaPlanet. And now you start to see a long tail of asset also replicating this strategy. So it's fascinating for me to see the intersection of those two worlds. And it's a bit a circular loop, It's like we all started in crypto thinking we'll disrupt finance, and now we're going into traditional finance to provide accessibility to crypto. So let's see how that plays out.
Yeah, I find it sort of fascinating that crypto bros are now talking about dat companies and creating this whole loop. So, who's driving whose value. So, well, digital asset treasury companies for Bitcoin and Ethereum is one thing, but for every other token now coming up with that, it's it becomes a bit of a questionable structure. But yeah, some of the top tokens that one can understand. Okay, what has been
Agree.
um, what has been one of the, what shall I say, one of the toughest challenges you faced, Olivier, as a TradFi banker, then moving to sort of right at the forefront of digital assets with Laser Digital? What has been one of the most important critical challenges you faced? And B, if you can sort of close that out with what's sort of the vision for Laser Digital? How are you envisioning over the next few years?
I think it's the pace. Crypto moves so fast. You sit in TradFi and it can take a couple of weeks to reach a decision. And investment banking moves fast. Global market does move fast, but still, to reach a decision, you go through various committees and so on. Crypto native organization, they reach fundamental decision in hours. And that's fascinating to me. And having to adjust to that pace has been very much a wake-up call, where it doesn't mean you take shortcuts, but it means you need to zoom in as quickly as possible to the core issue and then make decision with sometimes limited information, but risk accept from some of that. And um, it's been a journey to adapt to this. I think at Laser Digital, we've done a fairly good job at this, but we had many mistakes at the beginning of our journey trying to react with the pace that is required in this market in this market that we all operate in. So it's really for me been a wake up call around trying to make decisions much faster than what I used to after close to a decade in TradFi. As for the vision for Laser Digital, it's been the same from day one. We are going to see tokenization of everything, whether it's 4 trillion market or 30 trillion market. I think the latest BCG report doesn't matter. Tokenization of everything gradually, meaning that the traditional securities and traditional systems that a bank like Nomura has been operated for 2-3 decades going to have to adapt very quickly to a 24/7 world with instant settlement, full transparency, and a set of decisions that we just discussed that will have to be taken in hours as opposed to weeks. And the vision that we have as Ledger Digital is we're going to be one of the leading institutional grade digital broker out there. Institution from buy side to a sell side to large family office to pension fund to insurance company, they will have no choice but to trade some of those tokenized assets to generate the yield they need for their clients or the returns they need for their clients. And they're going to have to deal with an entity that is able to meet their requirements, both from the regulatory and risk management standpoint, but also from a technological standpoint. And that's what our vision has been on day one. And that's why, for us, tokenization is so fundamental. That's why we ended up incubating this project, because tokenization is the driver, the primary entry point by which we're going to bring all of those products, as we discussed, on chain for then all of the traditional clients that we're going to face, or that Nomura is facing, but we need some of those underlying. And so that's the vision. That's what we're busy executing. We keep our head down. We don't necessarily advertise a lot, but we're building, I think, what's going to be the leading kind of a digital asset broker in globally in the world. Yeah.
All right. Okay, to that vision, and thank you for being on Alpha Unhashed. Enjoyed this conversation. Thanks, Olivier.
Likewise. Thank you.